Good afternoon, ladies and gentlemen, and welcome to Tuesday's Market SITREP, or Situation Report here at TGO, Top Gun Options. My name is Matthew Buckley. My call sign is Wiz. And folks, today at 1 o'clock, hopefully you're actually seeing this later in the afternoon because you should be in our 1 o'clock primary live trade brief. We're doing the PLTB primary live trade brief at 1 o'clock Eastern. And we have a lot to talk about in our full throttle week. Everything's free this week, folks. We're opening up the doors to our normal trading squadron, our live trade briefs this week. All you need to do to register is head to go.topgunoptions.com/FT. That stands for full throttle. We got Apple earnings, we got a Fed meeting, we got Amazon, we got Chinese trade talks in Washington, we got potential civil war in Venezuela. A lot going on in the markets, folks, and we're going to be covering it all here at TGO, showing you our existing positions in our model portfolio, along with adding new positions as we see fit. So like I said, head to go.topgunoptions.com/FT, and you can join us for free. Make sure you register, folks, not only to get access to the replays in case you can't attend, and all the events are on here on this page, but we'll also give you a copy of our proprietary 7-step trade plan, as well as a copy of our OPCL, the Options Pocket Checklist. I mean, there's essentially $100 in value right there, folks, just for registering. Here's what is going on today. Obviously, Dow's up a little bit, Dow's down a little bit. It was up 100 points, went down about 10 points. We really are wallowing in this no man's land, folks. We are just hovering above the 50-day moving average on the S&P 500, well below the 200-day moving average. And as I said in the past, this is no man's land. In between these two moving averages, they kind of act like magnets. You either get pulled up to them, like we did recently with this hopium rally, or you get pulled down to them. We're not gonna hang out in this 50-day near this 50-day moving average much longer. And if Apple, Amazon, Facebook swing and a miss, or something bad with the trade talks, or the Fed doesn't say all the right words, we're definitely going to head lower, folks, because 2019 is really looking as the year of the global slowdown here. Not only is the IMF predicting that, but last week we saw GDP reports out of China, the lowest GDP print and domestic growth since I was a junior in college, 1990. I know I'm dating myself, but that was a while ago. So their 40-year growth spurt, China's growth spurt, really is kind of ending, and it's kind of ending with a resuming thud. Remember, though, always keep your eye on really what's going on with the with China here. Yeah, they pump massive quantitative easing to keep their markets afloat. Last time their markets imploded about 3-4 years ago, they banned short selling. You could be opening only. They made all their sovereign wealth funds buy stocks. I mean, they can really do some good work at the end of the bayonet if they want to. But the real story with China, folks, is what? Their strategic game plan here, man. They could care less about a trade war. And even if they agree to, okay, we're going to stop stealing intellectual property and we're going to start doing this stuff, they're not. They're going to keep stealing our stuff. And what's the enforcement mechanism in a trade agreement? We get back into another trade war. So this is the true strategic picture, folks, is they want to take over the world, or at least keep the United States out of Asia-Pacific area. So good beginning to the year, folks, but it's starting to get a little long in the tooth, so to speak. And this guy is the main reason for all of this stuff. He wants to be seen as like over-communicating and really keeping, folks apprised of what the Fed's going to do. Well, he caused this implosion and he caused this explosion. That's not good. The Fed, my advice to the Fed chief, stop talking. Let the markets work. Let us do our job. You do your job. You control inflation and employment, man. We're at full employment and inflation's under check. Stop talking. And moving equities around. So right now we're essentially unched. I get the Dow's up triple digits. That's just mainly because of a couple of Dow components. But I'm telling you, man, a lot of the heavies are saying a lot more meltdowns are coming. The co-president over at J.P. Morgan says more market meltdowns like December are coming. Morgan Stanley, hop off this bull and rest up for the next rodeo. We're getting ready to head lower. And what did we see in Q4? The biggest investors' dash for cash since, you ready for this? The financial crisis. Here's how much people or sovereign wealth funds, hedge funds, institutions went to cash. When's the last time we saw this much cash come out of the market and sit on the sidelines. Ooh, 2008, Q4. Does that, anybody remember what happened around that time? Big event, financial crisis. So we got tech earnings, trade talks, and the Fed meeting coming this week. And Apple needs to deliver. 3 weeks ago, Tim Cook came out and said, oh man, things ain't going good. Stock got hammered. A week later, he does a softball interview with Jim Cramer on CNBC. Stock rallies. So I'm confused as to what Apple is going to do. Apple is a serial under-promise and over-deliver, meaning if you can't hit the ball over the net, what do? You lower the net. So is Apple going to rally on less than terrible news? It's going to be really interesting. I don't trade it. I sit on the sidelines. I don't trade earnings. I grab my popcorn. How many of you have been right on, hey, they crushed earnings and the stock goes down because of forward guidance or some other issues? Don't trade earnings, folks. It literally is gambling. But we covered this last week. I said volatility is unusually low, folks. When vol is cheap, you buy it. When it's expensive, you sell it. You needed to get long volatility last week, and you actually need to be long volatility right now. Let's take a look at the VIX. The VIX was up 15% the other day. Nice pop in the VIX right here, and we're staying a little elevated right now. Right here, 50-day moving average pop, 50-day moving average pop. We've been below the 50-day moving average on the VIX for about, 3 or 4 weeks as this market has rallied. The chickens are going to come home to roost, folks, and we're going to give some of this rally back, and volatility is going to spike. January 30th, which is tomorrow, big. A lot of earnings coming on, and also QT, quantitative tightening. On January 30th, tomorrow, there's the quantitative tightening, which is the Fed's balance sheet runoff, is its biggest. Look at this. That -7.5. That's the biggest balance sheet unwind in a long, actually until March. Big volatility day tomorrow in the markets, so make sure you are hedged. And it's going to be interesting what happens with Facebook. The roaches in this kitchen, man. Facebook really is the Titanic. It's over with. I get they're trying to merge their messaging systems with WhatsApp and Messenger and all sorts of stuff. I can't even brief you on all the roaches in the kitchen. But again, I could be wrong. I'm going to grab my popcorn and wait for Facebook earnings. So going to be an interesting week, folks. Don't trade this market solo. At least just for free, come check out a couple of our live trade briefs. You'll get access to all the replays. The replay from yesterday's weekly options brief is already on the page right here. And here's the replay page. Just make sure you write this down. go.topgunoptions.com/FT. That stands for Full Throttle Replay. So make sure you watch yesterday's weekly options brief. We talk about hedging against an S&P 500 pullback short term with the ProShares Ultra Short symbol SDS. So go check that out. It's go.topgunoptions.com/FT replay, and that's obviously where the replays are going to be all week. And you can also download on this page the 7-step trade plan and our OPCL, the options pocket checklist. All right, guys, I got to go get ready for our 1 o'clock brief. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see you at 1 o'clock, or I'll see you tomorrow at 1 o'clock for what is called accelerated retirement. Have a great rest of your day. God bless, and we'll see you.